welcome to the 5-Star Podcast, episode 47. And got myself, Winston.
Hey, what's up, Kenny?
Richard.
Rod.
All right. So,
Happy Lunar New Year.
Happy New Year. Happy New Year.
Happy New Year.
Yeah. So, we're just going to dive right into it. So, today we're going to be talking about just the economic downturn of what's going on with 2025 and kind of bleeding into 2026. And just kind of wanted to know, just overall, what is the, you would say, like, what are some of the money moves that you guys would do yourselves? And what would you guys do with recommending your clients, friends, family, whatever it is? I'm going to give you guys certain scenarios and we can kind of go off of that. So first things first, just for those that missed our last episode, this episode, we're just going to gloss over what happened in 2025, just briefly, and we're going to go from there. So, like 2025, what'd you guys think? What's just kind of like a quick summary?
2025?
Kind of sucked.
2025 was a change in temperature. Temperature is the wrong word, but it's a change in pace with how the market is operating now.
Yeah.
It went from a seller's market to buyer's market, and now honestly, I feel like it's more in a balanced market, or what we call more of a normal market. So that's sort of what changed in 2025. So it's a change in practice, change in psychology, change in how people look at the market today.
Mm-hmm. I mean, for me, 2025 was pretty bad. What I saw is a lot of uncertainty from buyers, sellers wanting to sell, not getting their price, listing, relisting, just not really getting what they want. Their expectations are just, they might have even lowered it, and then they're still not getting their price. So
yeah, I share the same sentiments. I saw a lot of bid wars that weren't happening. Like, they set it up for a bid war and it's still on the market the next day, and then they relist, right, at a more reasonable market price, I would say. But I definitely I didn't see the same level of competition, and the buyers were, they sort of had this, I'll wait. If I miss this one, I'll get another one. It's okay, right? Yeah. I'm okay.
It's interesting that there's still bid wars out there, to be honest. I don't really understand how that's happening, but people are getting offers. It's crazy.
Yeah.
Well, they have to really lower their price drastically to get any type of traction. So if you're lowering it by 100,000, 200,000, and your house is like $1 million, you're not getting anything.
Yeah, no, I heard recently that there was a property in York region area. I forget if it's Richmond Hill or Markham. They got 16 offers on the house.
Recently?
It was a couple weeks ago.
It's not like $1 listing or something.
No. It was listed low, obviously, but it didn't sell though. Mm-hmm. They got 16 offers, but it didn't sell. Mm. And then another house had 9 offers. Mm-hmm. That one sold.
Is it the $1 offer, and then people are like, "I'll give you $5." No,
nobody's giving their houses away. But I think the seller expectation in that situation with the 16 offers was still pretty high. The market was basically telling them this is what the market is generally worth, but they weren't accepting.
It's pretty crazy how they received 16 offers and the seller didn't take one. It must have been all low, or maybe the seller.
No, I think it was maybe where the market is supposed to be, but the seller's expectations were just way too high.
Mm-hmm. That's crazy.
That's the only justification I can think. You have 16 offers, and not one of them is actually a fair market value.
I know. The chances are someone has to be at market value.
Yeah, exactly.
So
there's got to be one.
Yeah.
But they didn't take one, so unless it was 15 fake ones and one real one.
Yeah, just a good
15 fake off.
Just a waste of everyone's time that participated in that.
I know. No, but listen, I mean, a seller has the right to not take anything, right? It's up to them. And if they want to write out the market, but to your sentiment, I mean, people are still thinking it's 2022.
No, they're not thinking 2022.
Well, I mean, I'm just saying.
No, fair. I actually recently went on a listing appointment, and the seller was like, "Well, I tried to sell last year. I got an offer at $950, and I didn't take it. But now my expectation is $950." And I'm like, "When was that offer?" And they were saying, "Well, it's March." I'm like, "Well, March last year and March this year is going to be different." So we can't adjust for that. I'll show you the market stats, and here's how it's adjusted. So your expectation is still not realistic. I mean, how soon do you have to move? And then they're like, well, I'm not in a rush. So, all right, well, let's set up a plan here then. You know what I mean? Like that's sort of the experiences that I'm hearing.
So what, how did you advise that particular client of yours? Like, just did you go forward with it? Are they waiting it out? What's going on with that?
Well, right now I'm waiting because they're traveling, so I can't do anything about it. So I don't know. Maybe the market would change in a couple of months. Who knows?
950 last year would be like, I don't know, 900.
899 maybe.
Honestly, I think the market value for that is probably around like 880,
Wow.
890.
Wow.
Okay.
Right, but they have different expectations. But you know what? Some sellers, they need to see what's happening and then see that it's not working, and then feel the pain of having it on the market for a little bit, and then get them to adjust because they need to see their reality. They're not going to just trust our word, unfortunately.
Yeah, but you know what? Some sellers are actually just testing out the market with no real intentions of selling it. I've seen that too. Like, let's just put it out there and let's see what happens, right? If I get what I want, which might be...
There's a lot of that, though.
Well, yeah, right? If I get what I want, great. I'll take the offer. If I don't, I can wait. Let's just test out the market. And that's, again, fair. You can do that.
Yeah.
It's a waste of everyone's time, though. If you're teasing...
And resources.
You're teasing offers and, I can't really have this. And it's like...
for you, if you're taking...
Yeah, well, as a listing agent, but even the buyer's agent, right? You're like, why am I putting this offer in?
Well, you have to market it as a seller.
Yeah.
Seller's agent and whatnot. So you're putting your time, your resources into listing something that's basically like a lemon.
Of course. Right? So
I don't know. Whatever works right now.
you have the
I need
right.
more deals, guys.
Yeah, you have the right.
Tell me about it.
So Win had a good question. I think you want to bring that one up. The scenario.
Yeah. So, that was just kind of like a quick gloss over of our experiences 2025. And obviously, like, we saw a pretty drastic change in just buyer mentality, seller mentality, and it was not good for either side. So, okay. I think for the next portion is just kind of like a where would let's call it the move your money section. So you have a little bit of money.
Move your money. Okay.
Yeah. Move your money. Let's just kind of name it that way. And what would you do? Like, there's a couple options. If you have a little equity or if you have a little bit of money in your pocket, what's the best thing that you would do with that money, or you advise people with that money? Should they do a little bit of renovations to kind of make their home a little bit better? Should they, I don't know, go on a vacation? Should they invest that money? Or should they just kind of sit back and do nothing?
So
Okay, so if people had money, what would they do with it?
Like a little bit, not like
how much?
hundreds of thousands of dollars. So most people that have a little bit of money, I would say, if they were to invest in property, let's say they have about like 5 to 10% of like $100,000 or something. $100,000 would probably be like a safe number to.
Can I ask what their intentions are?
Their intentions?
To make
just
money?
like
To make money?
well, to make money and.
Okay, well, definitely
yeah.
not going on vacation then if you want to make money.
Yeah.
Like,
Dude, you're gonna make money on vacation. What are you talking about?
How?
If you go to where Vegas, you're gonna
Yeah, man.
blow 100,000.
Yo,
on
15 black. I'm telling you.
or red. No. I think so. The context of the question is, in today's market, if you have the opportunity, let's say you have extra cash,
100,000.
Let's say 100,000.
all right, and you're asking us what would we do with it in today's market?
And how would you make money off of that money? Right?
How would you make?
Or like, so I know some people that they have a little bit of money and they're like, hey, you know what? I want to speculate and I want to use that $100K, put it as a down payment, and it'll make money later, right?
Oh, I see. Okay,
So that's also an option. Like, what would you do? What would you do?
like
how would
holidays
you
for money.
advise it?
So remember we had an episode maybe a couple years ago about if we had investments, would we do real estate or stocks? I guess.
Yeah,
this is-
I remember
this is
that
kinda
one.
Back to this,
Yeah.
But hey, stocks won.
Stocks did win.
Stock-
Yeah, you
one.
were right.
Although right now stocks are a little bit rocky right now, but I still think stocks is the right way to go right now. Yeah.
Yeah, if I had to put money in to make money, yeah, like stocks are probably the best way to do right now for the temporary time period.
Yeah.
You never know because it seems to be too inflated too right now.
It came down a bit, but you're right. It's still pretty close to all-time highs. But I would say what not to do right now. I wouldn't flip houses right now.
Oh yeah,
I wouldn't buy one.
Well, that's risky now. Yeah,
Very risky because
it's risky.
as time goes on, like back then,
There's a time and place for flipping houses. You gotta time the market. You have to know where the market's at.
Yeah.
If it's sort of moving towards the seller's market, and you have rundown homes and you want.
But you know what? Actually, like we haven't never really kind of talked about this, but could that not be an option? Let's say in a different, like obviously not in Toronto right now, but let's say if you're on the outskirts, would it not be a good idea to kind of invest in smaller towns that you can buy really cheap and then potentially flip in about a year or two?
Yeah, listen, I know someone personally who was doing that.
Oh, really?
I forgot which town he is, but it's a small little town that's booming apparently with rentals.
Okay.
And so he's buying up sort of older proprities and
Or even like college towns too, right? Like university
yeah,
towns. That
I
could
mean,
be possible.
remember we had that podcast with
Brian.
Brian, so
Yeah.
we talked about that.
But that was a different time.
Yeah, but you're saying like right now, would you put it in stocks or would you put it in real estate?
Yeah.
Would you? So let's say you knew you're selling your house, right? And it's a slower market, so there's going to be some time before you put it on the market.
Mm-hmm.
But you got $100K, but you need a finished basement because you are believing in yourself that you might get more return, more value for it when you list next year. Would you put that $100,000 in finishing the basement?
It depends on the condition of the house. I mean, if you finish it, basically you can do that and maybe spare a little bit and kind of do a washroom or a kitchen or something, right? So again, it depends on what the house needs. But
Yeah, it depends on your situation. But I'm just saying, if you had, if you knew you were going to sell in a year, and you've got this cash now, you might not have it next year. Knowing the market, would you dump it into the house and improve it?
That's pretty speculative. I think that you have to sort of forecast where the market's going to be in a year and see how much money you have to sort of play with. Because again, going back to the same conversation, you don't want to over renovate and then not get your return because you're saying you want to make money on it. So you want to put money into your house to renovate so that you can get a bigger return on your sale.
I guess the only reason why you would actually do renovations right now is you've always wanted to do it and you actually need that extra space. Like for example, the basement, right? If you have kids and you only have 3 bedrooms and they don't have a play area, that could be a pretty decent investment because you can use it and you're not going to be selling right away, thinking that it's going to increase your value.
Well, you would renovate to enjoy yourself.
To enjoy.
Exactly.
And then
Yeah.
as a result, it will
Yeah.
increase the value.
Sure.
It may not make money though. That's speculative.
Yeah.
Exactly.
But however, it could help sell if your
Yeah.
end goal is to actually sell next year and you have to sell. Then I would do it for sure.
I think
But,
that wouldn't be a bad plan either because at the very least, you're enjoying it. You make it your own, and then hey, maybe you're into movies and make it in a theater room.
Yeah.
That could work too, right?
Yeah, no, for sure. That's definitely it. But go back to your other scenario. Would you put money into a small town? I mean, I think it really depends where and what city and what the economic drivers are for that community. So if there is a university there, if there is, bigger employment in that community that is sort of undeveloped or unseen, then that could be an opportunity to kind of consider. But if
It's risky, I still think right now.
no, because it's all about population.
Yeah.
I mean, it's a
Yeah.
demand.
What's driving
Exactly.
this
So if you
town,
have
right?
employment there, then you're going to have demand.
Yeah.
So is
Or
there
if
is
there's-
there
if
a
there's students, you might have a good rental, demand as well, right?
so do you guys have anything at the top of your mind? Just maybe a location that might even kind of tick these boxes?
like
Waterloo?
Timbuktu.
Well,
I don't know.
okay. So but the objective is to make money. Is that
Just-
correct?
Yeah, I would say so.
So,
Or invest. It's like an investment.
well, if making money through investments.
You're not doing it for to lose money.
Right. So you would want to look at properties that are in a good city or state that has the prices in a relatively good place. and knowing that the area is not going to collapse in like a year or 2 years, 3 years from now, right? So you have stable employment in that community. That'll be one of the bigger factors I look at first, is what the employment rate is in that area. Secondly, what's the population growth in that area? What the supply situation is.
Yeah.
And then what am I buying? Am I buying like a condo? Am I buying like a rental income, like rental property with double income or triple rental income, right? It depends on what you're really looking at, what your budget is. And there's a lot of different variables. Is basically what I'm trying to get at.
I think it's a bad idea because you're literally putting all your eggs in one basket.
Without a
Some people prefer to put it into real estate than say GIC.
Yeah, I
right? Like
understand.
the GIC could be one way, or buying bonds could be one way, and then
True,
they prefer to buy real estate.
No, but I think to Richard's point, is this small little town growing? What's the infrastructure look like?
Yeah,
You know,
I was just
why do
kinda
people
throwing out
want to
the
live there?
idea.
Why do people want to work there? Is there a rental opportunity? Are values going up in that city?
Well, is there a rental opportunity now in any specific area? Like, I mean, rental market
I think there's
overall.
rental opportunities everywhere.
not- it's not
if
very
you
strong,
price it
right?
right? No. I mean, obviously, if there's nothing really driving that community, or employment or education, or they don't have a transportation infrastructure, then it'd be harder to get a rental in that area and to turn it into something really lucrative in terms of getting higher rents. But no, I mean, this is why you do your research and you do diligence and you figure out, okay, where do I want to invest in a rental property? Where do I want to invest in flipping? Where is it growing? What's the opportunity, right? Are going to be, in a place where you can't really afford the prices in the GTA. So this is why they go far east, they go far west, they go north.
It's true, but it also depends on your timeline. So if you're looking at a 3-4 year, okay, I want to see a return in 3-4 years, that's a very short timeline. I mean, generally people buy real estate and hold long term.
Yeah.
It's not like something they try to flip within a few years.
Yeah.
especially these small towns. I feel like you got to hold even longer.
Yeah.
Oh yeah.
Really see it pay out, but and again, that's all speculation. It may not work out.
Not all. Yeah, you're right. No, it's a risk either way, right? So most people, when I say most people, I mean I'm talking about the seasoned veteran who understands flipping, right? If they're already on their game, they know these areas already, right? So like a buddy of mine, he knows this small little pocket is growing, and he's targeted that. Even now, he's still doing it now. And he sees potential everywhere, and he's not going to stop. And he's doing the right thing, in my opinion, right? Because he knows, and he also knows how to build too. He's really, I mean, he's a construction guy. Mm-hmm. He understands what he's doing.
Okay, but it's not for everybody.
No,
I wouldn't
no.
recommend like a random.
If you're a first time like flipper,
Like, let's say you own your home
And-
and you're like, hey, you know what? I want to
Yeah.
jump in now. It could be a little bit risky.
you better do your due diligence.
for sure. There's a lot of homework
Yeah,
involved.
don't just jump in.
and plus, your 100K is like stuck there for like 10 plus years. You know, you can't really
Yeah.
liquidate.
Can't really
that
pull it out
easily.
either.
Yeah, I
Yeah.
guess so. But some people lock in their money for so long too.
Yeah.
Oh, they put it in a little tin can and put it.
No, like they
Under
lock
the
in their
mattress,
GICs
yeah.
for a few years or
Yeah,
something,
under the mattress.
right? Like
people
they wait
still
for
buy
it to mature.
GICs.
Of course.
What's a GIC?
But those are locked in too.
That's what I'm
There's
saying.
a 3-year
There's a
lock in.
3,
GICs
4
are
years,
good.
5-year locked in.
Yeah, I've got GICs. They're
So
Nobody buys GICs anymore.
are you kidding me? There's seniors that still buy
GICs are
CICs.
not
man.
good because they lock it in. They guarantee you like 3, 4, 5%, and they're like, what? That's
Yeah, but it depends on your position.
your
in life.
threshold.
Yeah.
No, it depends because if you, I mean,
if
for
you're
you
a
right now,
senior-
you wouldn't be
Yeah, if you're a
putting into money
senior-
GICs. Yeah,
Yeah.
of course not. But if you're 60 or 55 and you're
Like
okay,
zero risk tolerance.
yeah, like
That might.
Yeah, but there are people who
There's a
want it.
product for
Yeah.
everyone.
Yeah, exactly. There's a product for everybody.
Product for you? No.
No. I need more aggressive growth.
Yeah.
Who wants to buy or sell? Give me a call.
What, stocks or are we talking about stocks here?
I'm talking about real estate here.
But I mean, here I guess here's an interesting fact. StatsCan was basically saying like the unemployment rate. I don't know if you guys knew, but unemployment rate in 2025 was 6.8%, and
StatsCan based on where? What area?
And what was that?
it's just
what,
Canada.
Canada-wide.
Canada, yeah.
Okay.
what was it last year over year?
So it's year over year. It's like It's like 6.8, and that actually dropped in January. It's to 6.5. I don't feel it though. I feel like
that's because you're looking at Canada wide.
yeah.
That's different because Toronto has gone up. Toronto has gone up to almost 9%.
Yeah, that's different. That's above the national average.
That's why you don't feel it. That you're feeling the reverse effect. Because
Well, no, 9% as in like we're having a
Toronto
high unemployment.
unemployment rate, yes, we're losing jobs. The city's losing jobs. The government is not doing anything to help the cause. Like they're not attracting any new companies, any new employment.
That's you know what that's what I was thinking. I'm like they said that we're stable, but it doesn't feel that way. Like I'm looking at
The jobs are maybe in Alberta or like
yeah,
north.
maybe
or
they're kind of
something.
balancing it out or something because
Yeah,
it doesn't
'cause
feel
it's
like it's
spread
here in
over
Toronto.
Canada,
Yeah.
right? So it's not relevant to like we have to be very specific with where we're looking at the stats.
Yeah.
Yeah, because our unemployment rate actually it's really high in my opinion. In fact, it's actually resembles a little bit of the 90s, of the recession in the 90s, where we had unemployment rate at a higher rate and cost of living being very expensive. And that was the main cause of the recession. And obviously interest rates were a little bit too high too
They were,
back
like,
in the day.
the teens.
Sorry?
I think I remember my parents were saying like the interest rates at that point was like in like 13-14%. It was wild.
Yeah, but they're also buying the houses at a much lower price than
I mean, their income was like $2, right? Come on.
dude, I don't know, 1990s? No, 1990s. Wait, the minimum wage was like $6.85 or something.
No,
like
it
that.
was less than that because I was making $7 like in the 2000s.
I think it was like $5.
$7.
It was, yeah, no, I think it was $5.
Something
Yeah,
like that.
the 90s it was $5, and then
And
late
older-
90s.
No, hold on.
In my high school years, the average
No,
was
you're
like
right.
$7.
No, I think it was like $6.40
That's when we were
back
hey,
in the day.
That
When
was
we were like,
back in the day
no, but
when
that's what he's talking about.
Yeah.
So
no, this is
when we
late
were in high
90s.
So
This is
when
late
our
90s.
parents was actually like they're not working minimum wage jobs, but again their income was not like 200K house is expensive, you know.
It was, but it's relative, right? Because the interest rates were high.
19, 20%.
20%
credit
at
card.
200,000 or 300,000. 300,000 was the high. 300,000 was an expensive home. Like 100,000 was relatively, 100, 150,
It's
200,000.
attainable. I mean,
Those are generally the prices. that we're
100,000,
seeing.
you be able
But
to
at
get a townhouse or
20%,
something.
at 20%, it's the cost of it is actually much different than $1 million at 2%, 3%. Like it's almost relatively the same, right? I think it's. I don't know. I can't speak because I was too young to even remember like
or
what
care for it.
Yeah, exactly. I just cared about the TV shows. What's going on
Saturday
night.
mornings, man, you gotta wake up.
Actually, no, I had Chinese school, man. I don't know about you guys.
Everyone had Chinese school back then.
Yeah, 9 to 12.
We had
man.
Filipino school.
I had
looking at-
piano class and I hated it because it was in the middle of my session. Yeah, but I mean, what do you guys think? So, inflation rate for just groceries last year, because I know a lot of people kind of feel it in that sector. Like, you're $100 this year, you're buying next to nothing. Like, I go to Costco and 4 items, it's $100.
It's very easy to reach $100 at Costco. Very easy.
It's
Oh,
you
dude.
blink your eye and you're like, oh, I dropped
Buy 3 or
100.
4
I
items.
can't. Yeah, I can. Costco is my place, but it's like
It hurts now.
200-300 minimum.
It
every
actually
time I go out
hurts
there.
now,
It's
right?
like,
If
this
you
is
feel it.
crazy.
And so I don't know if you guys know, but food inflation was 8.6% increase.
Wow.
Do you guys feel that, or
Yeah,
like
I feel
you
it.
actually see it?
Yeah, no, I see it. I see we're getting a lot less, right, for the same amount of money
Yeah.
in previous years, and I can see it. We my kids, we eat a lot. I see the grocery bills.
Oh, sorry. Actually, 8.6 is the wrong number. It's 6.2, but 6.2 is still pretty significant overall
I feel
across the
it.
board.
I think none of us here can ever say that that's not true, right? Let's use
Inflation.
yeah, for food.
food.
For food.
Yeah, for food.
Like I mean,
Even going out to eat.
I know I don't
even
go
going
out
out
to
to
eat,
eat.
as much now, right?
Yeah.
Like, it's just not feasible.
Now with those rates.
I know.
But think about it. The cost of the same meal that you used to get is now like what?
Okay, so I don't know if you guys remember, just maybe like 5 years ago, a bowl of like now it's like $20.
Okay, it was okay, it would have been like what? Like
It would have been
12
like
bucks?
$12.
Yeah, 12
I know beef went up, but like
Yeah,
that
but
much?
no, now it's like 18.
$18.99
Yeah.
plus tax tip. You're well into like $22,
sure.
$23, and I'm like, what am I getting
For a small,
one bowl?
For a small too.
No, you can get a large. You can
For 20?
like
I think-
$18.99.
So how much would a large be then?
$18.99.
No, if it's small, it's
$19.99. I don't know, man.
Okay, so how does this all relate back to real estate?
Oh no, it's just we're reminiscing, the good old days, right?
man. Let's talk
But
about those. Okay.
like with these prices, obviously, you have to. Everyone's got to hold their pocket a little bit tighter, and kind of back to that whole, what would you do with your money? Now, we kind of glossed over a little bit about investing in real estate right now. It's not the strongest option. So
I think it depends on your objectives always, because some people may they feel like buying real estate could be a good option because they want to put their money into something and have rental income that comes through. And as long as the cash flows for them, if it grows 1-2% a year, that's good enough for them, right? Because it's a long-term hold. So timing in the market versus, trying to buy the right time.
Yeah, I'd say if you have cash lying around and you don't mind waiting a long time, you don't need the money. I'd say investing maybe like in one of those distress sales, those assignment sales with pre-construction condos. It's just
Really?
Yeah.
Do you think so?
I think so. What if you had?
I
Like,
still think those are overpriced.
What if you? Well, okay. Well, that's why I'm thinking like distress sales, right? If you had a kid that's going to university downtown in like maybe 5 years, would it be worth it? I don't know.
I guess it depends on the actual unit that they're selling.
Yeah.
If it's like 300 square feet, I probably wouldn't want to look at it personally.
Oh, probably not. Yeah, it's got to be a real unit. Yeah.
you need an actual bedroom with a door.
Well, because you're always going to be comparing, okay, what's on the market and what am I buying in the
It's-
future?
Yeah, it's a lot of speculation, but I'm hearing a lot of stories of people, forfeiting their deposit and then maybe even paying some buyers to take their unit, right?
Yeah.
There's a high percentage of like builder units getting like defaulted and buyers actually just giving up their deposits. So they're losing like 10%, 15%. Just
I wonder what the builders are doing here because they're not giving any room for these people.
well, I don't think they actually can because like let's say they give room for one person, then the other 100 people are going to ask for the same thing, if not
that's
more,
true.
right? So like,
Yeah, that's
and then they can't even get funding from the lender at that point.
Yeah, but they're defaulting on majority of their contracts that they have. What are you going to do then?
Yeah, I mean, look, they bought it for X number, and then the appraisal comes back at this number, and then they have to come up with a shortfall, or
Yeah.
it's tough. It's tough. I know.
Tough-
I know.
tough
We've all seen it because we do pre-construction, so we've seen it within our own sort of clientele and kind of the buzz within associates and all that stuff. But it's reality. It's a hard reality that's happening right now.
It's a hard pill to swallow because if I look at a contract for, let's say, a 400 square foot unit where they bought for 500 or 550 or whatever,
Crazy.
it doesn't seem like much, but honestly, the market value, if the resale value in the resale market, if I had the same exact unit, it'd probably be 350,
Yeah.
330 maybe. Right? Never mind the fact that they bought at 550 and in closing they have to pay the levies, the development fees.
That's true.
All
Yeah,
the
you got to
extra
take
fees.
that.
Right.
All the
So those are all additional
Yeah.
costs that goes along with it.
And
So
even the
therefore,
tax.
it's not even. It doesn't make much sense
Yeah.
because the math has to math.
So, I mean, in that case, like, I mean, kind of going on that, would it be advisable to buy like a resale distress unit? I mean, that wouldn't be a bad idea.
See, here's
'cause-
the problem though. If you buy a resale unit, the rents are not high right now either.
well, I mean, if they're distressed, then you can get a better deal. Like,
Yes, again, you have to work out the math, but again, it's not ideal if the rents are not as going.
Yeah, if it's not justifying, even if it's a distressed sale and it's a deal, you think, but the rental rates are far below market average, then you're still out of pocket. Does that make sense, right?
Yeah,
You have to
got
find a really, really good deal.
Yeah, I think
Really, really good deal.
most real estate investors are avoiding buying rental properties that aren't cash flowing. I think nobody's doing that right now. Most of the condos right now, like the 1 bedrooms or the 2 bedrooms, they're just end users buying them up. They're not investors that are buying unless they have a lot of cash and the numbers work for them. right?
Can you even cash flow still? Like I know prices went down, but also rental markets went down. So
You know what's tough though? The cash flow at 20%.
No, again,
down
if you have
payment.
enough-
you've got to put a huge, healthy
exactly.
down payment.
That's how much
do
equity
the
you put
math.
down.
Yeah.
Right. So some people may hold for long term. They're like, okay,
Yeah.
well, I want to buy. I don't want to. Okay, maybe they're a senior and they want to buy these condos, but they're not buying it for themselves to grow. They're already like, I'm good. My money is good. I'm buying this for my future, my legacy. Right. So my kids, like their grandkids, I'm holding on to a big portfolio of condos because I think they're going to go up in the next 6, 8, 10 years. Then go ahead and do it.
I mean, if you can hold it and you have that flexibility, that I don't think that's a bad plan either.
Yeah, like for sure. I mean, it really depends on the mentality and where the investor is looking at and what they're trying to achieve. Right.
But if you're, let's say, we're to kind of pull it back a little bit. So 100K, would you invest in a investment property today? Yes or no? What do you guys think?
for me, no. I do Bitcoin maybe. No, seriously.
100K big bit.
Yeah, why not? It's like so low right now.
What's it at?
It's at like well,
It went. That's because a
something
drop
thousand?
down, right?
60,000 or something.
From 110.
I mean,
You know what? I still can't understand Bitcoin. It doesn't make sense to me.
You don't have to.
Then it's just speculation buying. Like I just don't want to be
it's
speculating.
it's working for people, so it's working.
Yeah, I don't know. Whatever,
mean,
whatever
if
works for
it-
people,
if it
man.
makes
Like,
sense,
hey, you know what
great.
makes? Hey, if people's made money on it, great, man. That's
There's one,
fantastic.
people
That's gonna-
are millionaires. They're doing it. So
Well,
it's got
I
to
mean-
make sense to someone. I mean,
There's always going to be the outliers, and then there's a lot of losers, right? So, like, how many gamblers do you know are going to tell you about their losses? Right?
yeah, so
Not a lot.
you know what? Just take the $100,000 and go on vacation. I'm just gonna go away for
Just take a breather.
take a huge
Take a
vacation.
breather.
15 black boys.
Just put it all on red. Just put it all.
Your
on
vacation is to Vegas.
There you
One nighter.
red. Probably not.
Put on a sports bet. Let's go Raptors.
Oh man.
Yeah, no.
So investment wise, I would not do real estate at the moment. I would do something like stocks or something where you could pull in and out really easily.
Like
however,
more-
if I were wanting to upgrade, if I were in a condo and wanted to upgrade because my family's growing, then I would consider upgrading in this market. I think it's a great time. Sure, you're getting less for your condo, but
yeah.
the townhome that you wanted maybe 3 years ago was, 1.4. Now it's like
Yeah.
a million
Yeah.
or 1.1. Then I think it's worth it. I don't think it makes sense to downgrade, like to sell your big place and then buy a small place. Like financially, it doesn't make sense. I mean, it depends on your lifestyle, right? But financially upgrading, I think it completely makes sense.
Yeah, if you always wanted that bigger 5-bedroom home or whatever,
yeah.
now and you're in a townhouse for all these many years, you have lots of kids, and it's time to upgrade. Now's the time to consider, right?
yeah, I wouldn't
That's
put your life on hold.
Yeah.
You can't time the market, right? But for real estate, I'd say if you're ready, if your family's growing, just do it.
Yeah, it's not a necessity. So
I think it depends on where you see the market going. If your property is already at like 1.8, let's say, and it's a big home and you're scared that, okay, wait, maybe I can let it go later on. Because at the end of the day, sometimes the equity is part of their retirement funds. So as you're waiting longer and longer and longer, hoping that the market's going to rebound back or it's going to go up. But what if it goes the opposite way?
Okay, I see. So speculation the other way. Yeah, you're right. It could drop further. Yeah. So
Yeah, I'm not to say that it just depends on how your outlook is
Yeah.
in terms of where the market is at, right? Because if your outlook is that the market's going to go down, then
Yeah.
get rid of it now,
It could.
right? You want to capitalize on your gains as much as possible now. Whereas if it's you think it's going to go up, then okay, then hang on to it for a
It
longer.
really depends on the timeline too, right? Because Kenny was saying, if your kids are young and they're going to grow, and you're living in a condo,
Yeah.
it could be a good time now because
if you know they're gonna grow,
But
yes,
I was
they're
just
going to get bigger.
But here's the thing. I'll give you an example because I was talking to someone recently. They're in a big home, and they're at the peak. Their property was maybe 1.9, maybe 2 million. Okay. Right now, if I was to look at their valuation, this is going back to 2022, and they're like, "Oh yeah, I'm going to wait. I'm going to see if there's going to rebound back. It's going to rebound back, and then 3 or 4 years later, we're at 1.6, 1.45 maybe at most. Right? Like that's a big
that,
drop.
yeah.
That's
Yeah,
a $400,000 or
yeah.
$500,000
It's huge.
drop.
Yeah,
Right?
but you know what? That
that's
drop is realistic, though, right? Isn't
correct.
That's
That's
where we
real.
should
This
have
is
been.
real.
That's where it should have been.
This is reality. Like you can look at some of the
Yeah.
stuff that are selling right now. Some of these big detached homes, they were selling
Yeah.
at 2 million,
Yeah.
and now they're selling at 1.5.
Yeah.
Right. That's a $500,000 decrease. So waiting
Yeah.
is not necessarily always the best option, in my opinion. It depends on your
No, it could backfire,
It depends on
like
your
you're
market
saying,
outlook.
yeah.
It depends on your market outlook. Right? And that's probably the best way to put it.
But look, the fundamental issue of affordability is what we're talking about. Where were these prices headed if they were just going to be 2 million, 2.1, 2.5? Like, think about that, right?
Yeah.
For our children,
Depending on the variable.
for-
Just just another perspective of it. I'm
No, but
not
that's-
saying that downgrading is a good option or a bad option right now. Like it could be depending on your situation as well.
But you know what? It wasn't just buyers that were speculating too. It was also the lenders. The banks were also speculating as well. They were handing out money just like candy at one point, right? They were just like, "Oh, you want 2 mil? Look, they basically look at you and it's like, sure, okay."
Depends on your bag, man. Depends on your bag. I've seen some
A lot of the banks back then,
Yeah,
they were very, very lenient because deals were coming through so quickly and they're just approving everything.
Well, it wasn't as bad as the States, though.
Not as
like
bad
it
as-
was still
Oh,
pretty.
Like
Sub-
the States was
subprime,
0% down
yeah.
and
that crisis.
100% financing. That's crazy.
Yeah.
You're talking about 2008.
The subprime
that's-
mortgage housing.
Yeah, that's crazy. And then I don't know, like no, who expected the tariffs to hit the way they did?
No one even kind of
think-
expected that to come.
I think there was some inklings of it and talking about it, like maybe in
he did say
2024.
it, but not like. And then when he actually implemented the way he did it,
Yeah,
we know who we're talking about. We're talking about.
right. So who expected?
Yeah.
Who expected that to happen? I mean,
No one.
that turned the whole market upside down,
Yep.
You're right.
right? It created all the uncertainties,
Yeah.
and that's what caused everyone to pause. And I think you know what, like people were on pause. So my hope is that people were really on pause last year,
And
and,
they're
they
ready
were
now.
really uncertain, and they
Yeah.
just don't know what they need to do or what they should do. And 2026 could be, hey, you know what? I feel like there's some more certainty now. I know where the market's at. It's leveled off. Let's do what we need to do. Let's upgrade. Let's downsize. Let's do what we got to do. Like now the market's more stable, right? And that's my hope. 2025 was really a weird year.
Yeah, it was an election year. There's so many things happening. U.S. There was a lot of uncertainty. So
I
maybe
think 2024 was the election, and then he came in
Carney.
early. Oh, Carney. Yeah. Okay.
yeah. I'm not talking. Yeah, not the U.S.
Okay. No, I was a little
When things
confused.
were still the 51st state here.
I wasn't. I didn't want that. Who wanted
I don't know. You know what? Alberta might be the 51st
Yeah.
state right now.
Oh man. Yeah.
Oh, I heard. Yeah. Just-
That's a whole different conversation, guys.
Just whatever you need. All
okay.
right. So, I mean, okay. Let's kind of get to the last section here, like predictions 2026. What's gonna happen? What do you see is gonna happen? And
Okay, so let me read some Toronto Real Estate Board stats. Okay, for January Market Watch, just throw it out. So the number of sales year over year, January 2026 and January 2025. So we are down by. I'm sorry, guys. I have my glasses too. Minus 19.3% for the number of sales year over year, January to January, and average sale price January to January, we're down minus 6.5%. So the average sale price for a home in the Greater Toronto Area, $973,289 versus last year the average price $1,041,171.
You know what? It's not really alarming to me to hear those numbers because January to March, our market was actually kind of moving. Then April hit, and then it just kind of died because of all the retaliatory tariffs. But yeah, like I think it's from you reading those stats, it just feels like it's gonna. In my opinion, it's gonna
Continue.
not continue to fall the way it is, but I think it's going to be pretty level in terms of volume of sales.
Okay.
In terms of prices, it might increase a bit because we're going to be entering the spring market in a few weeks. So that's going to increase things or move things along. I think it's just come back to a normal market, guys. Like bottom line, if someone's going to need to do something, they're going to do something. There's going to be less speculation, less buying for the sake of investing. Right? Like it's just not going to happen.
buying for the sake of end user
Yeah,
based.
like the fact that you need it.
Yeah, necessity. Yeah, it's
Yeah.
necessity buying, right?
Yeah. That's just my perspective of it. If you have a marriage, you're getting married, and you need to buy a house for your family.
Rich, are you trying to tell us something? What's going on?
No, I got no. People might buy because they have babies
Rich is,
too.
What are you trying to tell everybody, Rich? He's family planning right now. It's gonna
Yeah, no.
long term plan.
So in the next 6 months, you guys feel like the market's just going to be stable? Rich kind of already gave us an idea.
Listen, I'm hoping for the spring market is going to be a good spring market. I'm hoping. I think it's going to be fairly stable, as we've been seeing. I personally don't see a huge surge in activity next month.
Kenny?
Yeah, flat year. Yeah, not much change.
It'd be, if anything, it'll be 2-3% growth, and that'll be pretty good.
Yeah,
If
that's-
any growth.
Yeah, if any growth. So
Yeah.
yeah, let's check back at the December of this year.
Yeah.
And see who's right.
Okay.
Yeah, but I'm really hoping the fact that everyone was waiting in 2025 is actually going to do something in 2026.
The buyers, you want them to all jump in at the same
But
time.
you know what? The fact that there was 16 offers on one property, or even 9 or multi offers on these properties, that just tells you that the buyers are starting to think about doing something.
They're out there. They're just cautious, right?
Yeah.
Buyers.
So there's buyers. There's still buyer demand. Would you do a price bid war right now? Would you price your home to receive multiple offers?
I mean, it really depends on the product that I'm trying to list. It really does.
I think
It
I
really
would.
Does.
Yeah,
You
why
would?
not? Yeah, if there's no
Yeah.
competition, why not?
If you're the only one on the street or in the neighborhood, and you know your house is really, really good, I would do it.
There's no negative. What's the
Well, yeah, I guess you have nothing to lose because there's no one else you're competing against, right?
But if there's like a whole bunch of other houses that are like sitting on the market for 50 days,
I would still do that. I would still try it. Why not? You want to join the flood? Just try something new, right? Worst case, you just waste a week,
Yeah, you relist it.
but at least you know you tried.
Yeah.
okay. So for me, I think the like this coming 6 months, pretty flat. But I think that a lot of the buyers they're getting into the mode of just considering, like, interest rates are no longer dropping, because last episode we were talking about how people were speculating that interest rates are going to drop even further next time, even more. So there's like, I'm going to hold off on doing anything. So now that they've stopped that, people are like, oh, this is the new norm. Now I can start thinking this is going to happen. So
you think buyers are gonna?
I think they're going to be a little bit more. They're going to be
They're
a
gonna
little
jump
bit
in.
more encouraged to be like, okay, I think we hit the bottom. Like some, not all, but some buyers are going to be like, oh, I think this is the bottom. So
Yeah.
there's still a lot of prices.
So we're talking about the interest rates. Bank of Canada last year, they talked about wanting to settle the interest rate around like 2 and 2.25. Isn't that where we're at right now?
We pretty much hit the bottom for. They don't want to lower it anymore.
I mean, getting below 2 is going to be, yeah, I think it's going to be a little bit different. But I think they're going to hold around like 2. So right now, I think expecting market change or interest rate change is not going to, I don't think it's going to happen.
Yeah, I don't think it's gonna, like, if anything, it might even go up, just based on how they want to balance out the market, right? Because if they keep dropping, then inflation's gonna get out of control.
Yeah. What would you do if you had to renew your mortgage right now?
Well, I would still like I stuck it out last time. I didn't fix it. I actually went variable.
No, but now this time.
Yeah, I did it
Recently? You just did it
like
recently. Okay.
a couple months ago.
Yeah. 3 year, 5 year.
I think I did a 5.
Do you hear in the States that their interest rates are like locked in for you have the same interest rates for
Yeah, no, the way they do it in the States is
30 years,
different.
or-
The way they do it,
I know,
we do
was
it different here.
I know.
So whatever they get when they first buy, that's the rate they get for the whole duration of the amortization period.
Jeez.
And then if they
never
can
update,
buy down, they can buy down their rates. They can transfer that rate to someone else.
Really?
Yeah, that's
So
they have all these.
You can have the same interest rate for 25 years.
Correct. Yeah.
25 years at this one rate.
Yeah. Or their usually amortizations, I think it's 30 or 40 years.
But also their rates are pretty high though, right? I think
They're a little bit higher than us.
6,
Are they?
7% or whatever.
Yeah.
They're higher than us.
Well, yeah, it also depends on what state you live in and, the area. Like,
I mean, I get my
I don't know. I don't
state's
know.
info off of TikTok, right? All right. So, yeah, we're coming up on time. And yeah, if you guys like our episode, like our content, please share, and subscribe. And we'll see you on the next one.
All right.
Peace.
All right.
all right.
Peace.
Thank you.
See you guys.